Welcome back to RoxomTV. I'm your host, Jamie. We've got a lot to go through on this show today. We are going to take a deep look at what's happening in Iran, where protests are spreading out fast and shift to Greenland, which has suddenly become a serious geopolitical flashpoint. After what Donald Trump just did to Venezuela, a lot of countries are clearly nervous right now. That fear starting to creep into. At the same time, China is pushing back and making moves of its own, and it's pretty clear they are not going down without a fight. We'll break down what that means for energy sector, for tech, also in terms of some good news though. For example, MicroStrategy MSCI is staying inside the MSCI indexes, which removes a crypto link. So we'll kick things off with Bitcoin chart, jumping straight into the daily chart to see the latest price movement and how long this move might last. So on the daily, well, not gonna lie, since we do analysis like this every single day, compared to yesterday price movement, if you go back, that is the consolidation that I have beginning of December. So it looks like we're just like bouncing in and out inside this range a little bit. So we have a price like a bottom, I would say, inside this box around 84k till a ceiling inside this box is around 93 or 94k. So based on what I said yesterday, my prediction is that we're going to have to see if Bitcoin managed to stay above this major resistance. So at 94k, again, that is a critical level I was watching. And turns out we got rejected yet again. So looks like we might be just like bouncing in and out. Well, that being said, if you guys like to trade short-term momentum, because we are looking at the daily candles, there are good opportunities you can play, but this is not financial advice and everyone has different strategy. Even professional traders, they have different strategy. If I'm sharing my own strategy, trader number two might feel like, okay, this is not the most profitable way. So this is really catered to your own style, I would say. So point being, looks like we got rejected at 94k being a critical level, and looks like we're gonna get rejected like despite we have this nice little pump since 1st of January. So that was a, let's see how hard we pump. So from 1st of January, so we pumped like 8%. So let's take the top. So 94k, 8.5% in a matter of 5 days. That was really generous. So it makes sense that we get rejected a little bit. And if we go to the monthly return, December end up with a negative number, which was quite surprising because there were 3 consecutive months we end up getting a negative number. So let's see, generally, maybe we could close that with at least a neutral. But again, today is just 7th of January, so let's see how that plays out. Point being, in my prediction is that we're probably gonna stay inside this range, bounce in and out between 84k to 94k, so like $10,000 difference. So there are still some really good trades you could pull if you are into trading so often like I do. And another thing, another charts that people like to pay attention to is, of course, altcoins. However, as I predicted from yesterday's show, altcoins are just bouncing in and out. So for altcoins, so we are looking at the total 3, of course, that being total crypto market cap, excluding BTC and ETH, so pure altcoins only. So this level I drew yesterday, and a critical level we have to watch for altcoins is $936 billion. And it looks like we didn't even get to touch that. And so far we are retracing a little bit. So overall, it's still a bear market. Like we are bouncing, no doubt it's a general downtrend, but like since 1st of January, what it looks like to me is a relief rally, and then before heading to the third stage of a bear market, so before finding a bottom. So how low can we go? Many people would ask. Let's hop onto the weekly chart to zoom out and look at the longer perspective. So right now we have to pull out the 50-week and 200-week moving average. If we happen to lose the 50-week being the blue line here, 2 weekly candles below that, general rule of thumb is we are heading straight to the 200-week moving average. So of course this one's slowly going to catch up. So right now sitting at 57.6k, slowly going to catch up and till we found a bottom, because like right now is a relief like decade bounce before heading lower. And when will we break this relief rally? That's the second question usually people will ask. Like, to answer this, we have to pull up the Ichimoku cloud. So last cycle, we spent around 3 months inside this Ichimoku. We followed all the way to February, maybe mid-February. So in other words, rally, I won't be surprised, like even if we pop to as high as 103k, but technically speaking, that is still a general downtrend and that is still a bear market. Doesn't mean we are out of the wood. And offend a lot of people, and what I am based upon, of course, is still very heavily according to the 4-year cycle, and this is a very controversial topic, but like what we have seen, so let's actually close the Ichimoku cloud, and if we zoom out a little bit more, like what we have seen is the 4-year cycle, okay, maybe we didn't top on euphoria in this cycle. That happens to be the argument of a lot of people, right? But zooming out, what we notice is that, well, history doesn't repeat exactly, but it often rhyme. So we have the diminishing return, and we also have the diminishing floor. So the price, the correction that we get is getting smaller each cycle. However, if we zoom out, it's still, I would say, following the 4-year cycles pretty well, even though we didn't top on euphoria, even though 2025 end up being a negative year. So people tend to think, okay, 4-year cycle is completely broken. But like, my argument is that general rule of thumb, we're still following, though we didn't repeat exactly, but history did rhyme according to the chart. All right, so this is the price movement of Bitcoin. We are now going to turn to Iran, where protests are really intensifying. So demonstrations that began in late December have now entered the second week, spreading across the country. So as of this week, protests have been reported in more than 100 cities and towns, including areas that were once considered strongholds of the government. What started as economic frustration is now turning into a nationwide uprising. So according to the map, like where the protests are the strongest, like activity. So let's pull up the map. So here is the capital of Iran, Tehran. So it remains uneven, I would say. The activity in Tehran is uneven. The most intense clashes right now is happening in western side, so in western Iran, especially in areas around how do you pronounce that? Abdanan. Sorry if I butchered the name. In these areas, protesters have clashed directly with security forces. Police stations have been attacked and vehicles have been set on fire. There are also reports of local police defecting and joining protesters, which is, again, a potential warning sign for the regime. So, how the government is responding. So, there are some footage of local Iranian people fighting the government. Is extremely disturbing to watch. But how the government is responding, Iranian authorities are responding with force. So security forces have used ammunition. They have conducted raids, including at hospitals. So here's another tweet shared by the public. The Iranian security forces attack on a hospital where injured protesters are seeking medical care and shelter violates international law, and expose yet again how far the Iranian authorities are willing to go. This is just one example. And the authorities have also arrested wounded protesters. The government continues to label the reset as riot. Casualty numbers are rising, with dozens reported killed and many more injured. So let's go back to the core idea. Why people in Iran are protesting in the first place. Turns out the inflation issue is so intense. So let's hop onto the inflation chart of Iran. Let's look at the past year performance. So in October, there was a whopping 48.6% inflation. So in other words, Iran is facing inflation way above 40% for months, a collapsing currency and a soaring food and housing cost. The Iranian rial has fallen to record lows, wiping out savings and shrinking the middle class. So for many Iranians, daily life has become unaffordable. And this kind of creates a sharp contradiction because Iran has one of the largest oil and gas reserves in the world. They have massive natural resources, but ordinary citizens see no benefit at all. So the question everyone is asking, where did the oil money go? Well, of course, for Iran, it's going towards military spending, it's going towards foreign proxy wars and regime elites, not towards jobs or infrastructure or social support. So under uncertain times like this in Iran, will the US once again take advantage of the situation? Well, the short answer is a full-scale war is still unlikely at the moment, but of course, the risks have increased significantly. US military has sharpened in recent days with warnings directed in Tehran over violent crackdowns. However, there are no signs of large US troop movements, or like analysts still believe Washington is focused on pressure and deterrence, not so much as in actual invasion just yet. Any escalation would likely involve airstrikes or sanctions, not so much in ground war, according to the experts, of course. So what this means for the global oil market. If tensions escalate further, the bigger risk is energy. Iran controls near the Strait of Hormuz, where about 20% of global oil supply passes. A conflict could very much disrupt shipping and send oil prices higher. So, it makes sense for public to guess the next move from the US because there are striking similarities between Iran and Venezuela. First of all, both countries, they are rich in oil and they face heavy US sanctions. Not to mention, they have been suffering from currency collapse and high inflation, and they have seen economic protests turn into political reset. In Venezuela, prolonged pressure eventually led to regime collapse. Many analysts are now asking whether Iran is entering a similar phase. So, the situation like this is no longer just about prices or inflation. What we are seeing in Iran is economic collapse, political anger, and early signs of institutional stress. The situation remains very volatile. If protests continue and security forces continue to fracture, the implications could extend far beyond Iran, affecting oil markets or global risk sentiment and geopolitics. So anyways, we'll be monitoring these developments very closely. We are now going to take a short break, and after that, we'll dive deeper into the news of Europe and how NATO is backing Greenland even more.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Hello guys, welcome back. So as I mentioned, we are now diving into NATO and it's what's happening in Greenland particularly. Because like Iran is not the only place feeling the heat right now. Greenland is feeling extra pressure. What happens if the US openly threatens to take territory from a NATO ally? Because that's exactly what Europe is reacting to right now. Overnight, European leaders issue a rare joint statement pushing back against Donald Trump's renewed push to control Greenland after senior White House officials said military force is always an option. So, after what just happened in Venezuela, Europe is taking this very seriously. Yesterday, leaders from Denmark, from France, from Germany, Italy, Poland, and Spain, they all released a joint statement with a clear message. Greenland belongs to its people. They said only Greenland and Denmark can decide the island's future and rejected any outside pressure and threats. This is an unusually strong response from Europe, and it shows just how alarmed allies are right now. So maybe do show the screen a little bit so the viewers can see the joint statement on Greenland. And this response came just one day after a senior White House advisor said the US military is always an option when it comes to Greenland. The argument from Washington is national security. So there is actually a video of Donald Trump mentioning national security for many times. And BBC put that together. And he has been saying that for more than a year now. Like this response came just like one day after a senior White House advisor said the US military is always an open option. And the argument from Donald Trump directly is national security. The US says Greenland is critical to countering Russia and China in the Arctic. Because if we zoom out and look at the 3D map around the world, so here we have US. What Donald Trump meant is that probably we need a base in between Russia and China. So Greenland is just right here. So if we go all the way back, this is kind of in between Canada and Moscow is right here. So kind of in between Russia and US. So that's why Donald Trump is saying Greenland is a strategic place for military base. So as for Denmark's prime minister issued one of the strongest reactions so far. She warned that any US attack on Greenland would effectively end NATO because it would mean one NATO member attacking another. That would directly violate the allies' core principle of collective defense. Greenland's own Prime Minister also responded, calling for respectful dialogue, not threats. So why Greenland? Like Greenland has, first of all, the largest island, is located yet again, but kind of between Russia and US and at the center of Arctic. And the third reason is that Greenland is sitting on massive untapped resources, including rare earth minerals. As ice melts in Greenland, new shipping routes are opening, and the Arctic is becoming a new front in global competition. The US already operates a major military base there for missile defense and space surveillance. So, in short, Greenland, this country, is small in population but huge in strategic value. So, this, as I mentioned, is not new for Donald Trump. Donald Trump first floated the idea of buying Greenland all the way back in 2019. At the time, it was widely dismissed as a joke, but since his re-election, the tone has changed. He has appointed a special ambassador to Greenland. Senior officials are talking openly about force, and now Europe is responding as the direct military operation in Venezuela literally shocked everyone. That operation bypassed international norms, and it showed the US is willing to act unilaterally fast. So European leaders now fear Greenland could be the next. So if Trump is indeed planning on an operation at Greenland, there would be a direct hit and direct attack on NATO. Some argue Trump is using extreme pressure as a negotiating tactic. Others warn the damage is already being done. From Donald Trump's perspective, this is more about reducing dependence on China for those rare earths and asserting US dominance in the Arctic. He has repeatedly argued Denmark is not doing enough to protect the island, and last week, public still thought Donald Trump was bluffing as the name tackled Donald Trump always chicken out. But after Venezuela, his words now carry weight. Whether this is a bluff, a negotiation tactic, or something more serious, one thing is clear now. The Greenland issue is now a full-blown geopolitical flashpoint. So we'll be watching how this unfolds because the consequences go far beyond just Arctic. And another country that is not backing down is, of course, China. Just days after US cut China off from Venezuelan oil, Beijing has made a decisive move to lock down energy supplies somewhere else. China is doubling down on Brunei. This tells us a lot about where the energy war is heading to. So this is what happened. Just yesterday, Chinese energy giant, so Hangyi Petrochemical announced a major expansion of its oil refinery in Brunei. The plan involved like more than double refining capacity from about 160,000 barrels per day to over 320,000 barrels per day by 2028. This is a $12 to $15 billion investment, and the timing is, of course, not random. So why is China moving right now? The move, remember, comes right after the US operation in Venezuela. Before the raid, China was importing hundreds of thousands of barrels per day from Venezuela. Right now, the oil is gone. The oil flow is disrupted, and China needs alternatives fast. Brunei is a small country, yet stable but oil rich. From Beijing's perspective, this is a perfect backup. So, if you guys don't know much about this country, here's a quick background. Because despite Brunei is a tiny country in Southeast Asia, It has like only about 450,000 people, one of the highest incomes per person in the region, and an economy built almost entirely on oil and gas. So oil and gas in the country make up about 90% of exports and fund generous government benefits. But reserves are declining, which is why Brunei wants long-term partners, maybe like China. So how this deal works? The company Hangyi's refinery is a joint venture, so 70% owned by a Chinese company and another 30% owned by Brunei government. The refinery already sends a large share of its output back to China. After the expansion, that flow could increase by 50% or even more. So while the oil is refined in Brunei, the benefits flow straight to China. So this is very strategic play by China. This isn't just about oil. For China, this does mainly three things. First of all, it secures energy supply after losing Venezuelan oil. Second, it strengthens influence in Southeast Asia. And also, thirdly, it expands the whole of China scene. It also reduced China's dependence on spot markets and US controlled trade routes. So this is very much a long-term play here. As for China, China imports around 70% of oil it consumes. So top suppliers include Russia, of course, second is Saudi Arabia and Iran. Venezuela matter more, but now it doesn't. That's why China is looking in places like Brunei. So in short, yes, like, okay, China's energy costs might go up, losing Venezuelan heavy crude oil. It means it's going to raise refining costs and tighten supply. But China, massive oil stockpiles, and they have been getting discounted Russian oil, and they have long-term Middle East contracts. So the situation in Venezuela is very much manageable for China's side, and especially with projects like Brunei coming online. So, and other solution people are talking about, maybe China and Russia will keep trading energy forever, or at least for now. It works because Russia needs buyers and China wants discounted supply. Long-term wise, maybe the infrastructure limits growth and China is pushing towards renewable energy, but very much this partnership is very useful for the time being. So news like this key takeaway. This Brunei refinery expansion is not just an energy story, it's geopolitical signal. After Venezuela, China is moving quickly to secure oil, to lock in allies and reduce US leverage. The energy map is being redrawn quietly but decisively. Brunei just became a much bigger piece. So we are going to take a short break for now, and after that, we'll dive deep into the AI sector and how China is responding in the tech industry. Stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. So as I mentioned before we hit on that short break, we're now getting and diving deep into the whole China's AI sector because one of Meta's biggest AI acquisition is now facing scrutiny, but not in Washington, in Beijing rather. Chinese regulators are reviewing Meta's $2 billion plus purchase of an AI startup called Menace, raising fresh questions about technology, about talent transfers, and the growing US versus China AI rivalry. So, what happened during this deal? Here's the context. Meta completed its acquisition of Menace in December 2025. The deal is valued at over $2 billion. Some estimates put it closer to $3 billion. Right now, Chinese authorities are reviewing whether Menace violated China's technology export rules and when it moved staff out of China before being sold to a US company. At this stage, the review is still preliminary, but it could still delay or complicate Meta's plans. So, who is Menace? Menace is an AI startup focused on autonomous AI agents. So, in simple terms, these are AI systems that don't just answer questions, they plan. So they can plan tasks, they can take actions and complete workflows on their own. Think of them as digital employees, not just chatbots like ChatGPT. So Menace was founded in China back in 2022 and later moved its headquarters to Singapore in 2025 to reduce regulatory risk and expand globally. So why Menace is being spotted by Meta? This is because Menace absolutely exploded in popularity last year. So by the end of 2025, it had millions of users. It had over $100 million in annual recurring revenue. That's really good for a startup. And it has a wait list of more than 2 million people signed up. The technology by Menace, it can conduct deep research. It can write and deploy code and create content and manage multi-step business tasks. This is exactly the kind of AI Meta wants, like Meta, Facebook, the company, what they want to embed into products like Facebook and Instagram. So, why is China stepping in right now? Well, the concern is quite simple from China. Menace was founded by Chinese entrepreneurs, and Menace was really developed early, like the technology was founded in Beijing and employed Chinese AI talent. Chinese regulators want to know whether sensitive AI technology or algorithms were exported without proper approval. In Beijing's view, this could be a case of strategic technology leaving China. So, why the US is also nervous? Like, this deal has raised eyebrows in Washington too. Some US lawmakers worry about foreign influence in AI systems and security risks, or maybe dependence on globally mixed AI supply chains. Meta, the company, responded by buying out Chinese investors, shutting down China specific operations, and placing Menace under US management. This shows how sensitive AI has become on both sides. AI is now a frontier battleground in the US and China rivalry. The US would restrict AI chips and tools going to China, and in return, China would tighten control over talent and technology leaving the country. Menace is sitting right in the middle. So they have Chinese roots, they have global users, and now it's owned by a US firm. So this deal highlights how borderless AI talent clashes with national border. So the key takeaway here, this is not just a meta story, it's a signal of where the world is heading to. AI is becoming strategic, political, and tightly controlled. The question now is not whether countries will intervene, but how often and how aggressive. So this is just like more geopolitics news, but like it's not all doom and gloom. As I mentioned in the beginning of the show, there's some good news. For example, MSTR. So if you guys didn't know, like MSTR gets to stay inside MSCI. So MSCI is one of the most important index providers in the world. They have decided not to remove Bitcoin treasury companies from its major indexes. Of course, that would include MicroStrategy MSTR, which hold a large portion of their assets in Bitcoin. And this decision removes a major risk hanging over the market. Why this is such a big deal? I'm glad you asked, because MSCI indexes are tracked by more than $15 trillion globally. That means ETFs or mutual funds and pension funds all follow MSCI benchmarks. If MSCI had removed these companies, passive funds would have been forced to sell regardless of the price. That would have caused billions of dollars in forced selling. Of course, now that we have the news, that did not happen. So why, like what MSCI was considering before, why there is this concern from the side? This is because back in October, MSCI floated a proposal. They questioned whether companies that hold more than 50% of assets in Bitcoin still belong in traditional equity indexes. The concern was simple. These stocks move more like crypto, not like normal operating companies. So analysts estimated $10 to $15 billion in forced selling if exclusion went ahead. That proposal sparked strong backlash. And the final decision after months of consultation, MSCI chose a middle ground, so a middle path. They said Bitcoin treasury companies stay in the indexes, but MSCI will not increase the share counts in index calculations. So what does this mean in plain English? These stocks won't be kicked out, but that index weight won't grow if they issue new shares. So the catch investors now need to understand is that, okay, this matters because many Bitcoin treasury companies fund BTC purchase by issuing new shares or by issuing convertible debt. If MSCI doesn't recognize new shares, that would mean index weight gets capped, dilution becomes more painful, and future Bitcoin buying power is limited. So this is support from MSCI, but with guide drills. As for MicroStrategy, they responded very positively, and especially for the beginning of the year, they added 1,200 BTC on the balance sheet. This was reported on 5th of January. So, of course, Bitcoin folks are over the moon about this news. So, does this mean MSTR, like the block ways for MSTR has been clear, and the price of MSTR going to go higher? Well, in short term, there might be some relief rally, and now that Bitcoin is going on a decade bounce. Long-term wise, I would say MSTR is very much still depends on Bitcoin's actual price movement. If Bitcoin pushes higher, MSTR acts as a leverage BTC proxy. Vice versa, if Bitcoin falls, the leverage cuts both ways. So this is very much us investors have to put in mind if it comes to investing into Bitcoin treasury companies. So that's the latest on MSCI's decisions and what it means for MicroStrategy and Bitcoin treasury companies. We are now going to take a short break. When we come back, we'll be joined by our guest Brendan, the founder of Connected Capital, to help us make sense of where the markets may be heading to. Stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. I'm your host, Jamie. And we are now joined by our guest, Brendan, who is the founder of Connected Capital. Brendan has been closely watching global markets, crypto, and macro trends. So he is here now to help us break down where things might be heading next. So Brendan, it's great to have you with us today.
Thank you very much. It's great to be here.
Well, since this is your first time here, I went through a little bit of background. It's very interesting about your journey because you started as a journalist at South China Morning Post. Like, how did you cover like China and Hong Kong feel? Like, how does that shape how you feel the general market for now?
Sure. Thanks. Yeah, I can maybe first provide a little bit of background. I initially came out to China in 1998, and I really knew nothing about it. I was a kind of fresh grad, but I was very idealistic to pursue, U.S.-China friendship. And I thought, if I want to do that, I need to go to China. I need to learn the language. I need to meet the people. And I need to, understand what's happening. And then moved into covering entrepreneurship, innovation. And so I think I've been quite lucky in the sense that media and journalism has largely been an avenue to explore and to keep learning and study the things that, really fascinate me. And so I think, from the moment I arrived in China, the pace of development, the pace of innovation, the pace of growth was truly, truly astounding. And it took me a long time to get my head around it, but both working in media and also working in manufacturing.
That is a interesting journey. You went from media for like, is that like more than a decade ago? Like more than stay in the industry for more than a decade? And how did you change from media to Web3? What is the transition like? Could you share that a little bit more?
Sure. So my first sort of transition was from media into manufacturing and exporting, and that was really fascinating because as a journalist, you're kind of always trying to dig out secrets or dig out some hidden knowledge, whereas the people who have that knowledge, they have an interest in keeping it secret. So I often found myself in a, not necessarily an adversarial relationship, but I found that, I wasn't necessarily working together with my subjects in the ways that I wanted to. I also was I did not want to get pulled into political journalism. And so a number of those sort of factors combined together, and which I pivoted into manufacturing. And I've been very lucky arriving in China pretty early and making a lot of effort to learn the language. I've had a chance to experience many different industries. So I've worked in consulting in a number of different spaces, including real estate, property design, F&B, all of these things. However, when everything sort of went quiet during COVID, I had some time to think, and I realized that tech per se and finance were two industries that I hadn't really dug into. And of course, these were the sort of fastest growing, most profitable industries. And I just remember thinking to myself 5-6 years ago, I want to make a new departure. I want to make inroads into this space. And it just happened that because of the quarantine policies, some investor friends of mine in Japan were looking for access to early stage projects in Hong Kong. They're also looking for access to capital markets, and they were unable to visit because of the quarantine policy. So they encouraged me to get into crypto, and they said, listen, they said, we're investing, we're looking for projects, you can help us identify projects, and we can win together. And so I made the what seemed like an unlikely decision at that time to start hosting crypto meetups, crypto drinks, as a way to meet the people in the space and learn about it. And, it was definitely right place, right time. That was, summer of 2021. So the, governments all around the world were cutting stimulus checks. The markets were booming. There was the whole NFT creator economy. And it was as if everybody from every industry, all kinds of traditional, non-digital tech or finance industries, were all sort of coming into the digital asset space. So it was a really great chance to sort of get my feet wet, take on some initial consulting roles, and help some projects with their business development.
Well, that is a lot of information. So let's unpack and let's take a step back.
Sure.
Because you mentioned Chinese property before crypto. Like, I wonder, are you completely out of the whole Chinese property industry, or you still have some foot in the game?
Yeah, so I mean, that was another really sort of lucky opportunity. I can just say that so when I first arrived in China, my goal was to acquire the language within 3 months. At least to a very basic extent. I made a lot of efforts, and I got conversational pretty quickly. And that opened a lot of doors, just being able to communicate and not having to rely on others to communicate for me. Um, and so one of the things that happened, in the run up to the Beijing Olympics and the Shanghai World Expo, China was completing all of this incredible iconic architecture, right? The bird's nest, the CCTV tower, and the top overseas architects were all coming in to work on these projects. And at the same time, you had other international architects who wanted to do things on their own. They didn't want to be part of the large architecture firms. And so I fell into a great opportunity with Chinese property developers and Australian architects and landscape architects. And we were able to participate in many tender bids. We were able to win a number of projects, and a number of those projects have been completed and, are now housing families and people, all around Shenzhen. I was personally not an active investor, but was more of a consultant. And just to give you a little bit of background, so that was around 2011, 12, 13. And, what was happening at that time was that, I guess because property had boomed so much, that anyone who had done well in any business wanted to become a property developer. And I think the property prices just started to skyrocket. So the government introduced policies to cool down the market. And when that happened, a lot of the kind of would-be developers or sort of small to medium new developers backed out of the market. So, we had a great 2 to 3 year window to really sort of make hay while the sun shines. And when the policies changed and the environment changed, we also pivoted to other industries.
And this kind of a good pivot for me to ask you this question, because since you have been consulting around the Chinese property market, like right now, there is a criticism about the whole Chinese economy. We are in a bubble, especially when it comes to the whole property side of things. What's your take on that? Like, do you think that's coming back for Chinese real estate industry?
I mean, I guess I would answer your question with a question first, which is just to say, show me the economy that's not in a bubble right now. Of course, in China, the real estate is a more pronounced issue. I was quite encouraged to read something last week in SCMP that was talking about Chinese commercial real estate, commercial REITs. And so was that a real estate investment trust, I believe, and that they were actually they've been getting traction in sort of recapitalizing the industry. So I found that quite fascinating. I've been speaking with friends who are probably a bit more knowledgeable than I, and the general sort of opinion seems to be that it will still take some time to work through all of the debt, but that it's something which should be able to be sorted within the next couple of years.
Well, speaking of the issue that a lot of countries are going through, like of course, like talked about this in yesterday's show as well. Like zooming in into each country around the world, there seems to be some issue. Like going back to what you asked me, like which country isn't in a bubble. So I do agree deeply with that statement there. So since Hong Kong is pushing so hard on the whole crypto stance, what's your take on the whole crypto scene in Hong Kong? Because like you hosted multiple events like crypto drinks or DAFO in Hong Kong. What is the community like? Like, how do you sense that?
Yeah, well, thanks. That's a great question. First of all, I'd say the community is fantastic in that you've got tons of really smart people and really interesting people with very diverse backgrounds who, generally speaking, are very open to share. I mean, I came in as a total noob with no background really in finance or tech. And rather than, the elbows out approach, I found everybody to be, very welcoming and very generous with their time and their energy. As far as Hong Kong goes, I think it's a really fascinating topic because a lot of people will look at the market and judge it according to price, right? If the price is going up, it's good. If the price isn't going up, it's bad. I don't think that is Hong Kong's main objective. I think Hong Kong is more interested, and this isn't only my idea. This is, from things I've read and heard people talk about. But I think Hong Kong is very keen on designing and refining the future payment rails, the future sort of transfer of value rails, rather than trying to make as much money as possible in crypto. I remember, during the FTX debacle, JPEX, even before with 3AC, there's been a lot of crypto crashes or chaos or scandals or whatever. And I've always found that they, hit Hong Kong quite directly, both in the pocket and in the sentiment. And so I don't think that Hong Kong is backing crypto necessarily as a speculative asset, but rather as a sort of technological asset class that can help them sort of lead the way in finance in the future, at least in Asia.
That's really interesting because, like, okay, personally, I have been in crypto for quite a few years, and I came in February 2021. Yes, I remember that vividly because, like, I kind of like changed my whole life ever since. So, like, over the past few years, what I noticed in the whole crypto scene in Hong Kong, like, it changed significantly. Like in 2021, the whole Hong Kong government was quite hostile, a little bit hostile compared to other countries, maybe like Singapore. So after the whole JPEG collapse, the whole Hong Kong government is going all in crypto. And I agree with you. They are not seeing this as a speculative asset from the government side of things. But like when I talk to Hong Kong community, they do focus on the economic return quite a lot. Is that not what you get in the whole crypto drains or community?
Yeah, absolutely. I mean, it's amazing because at heart, Hong Kong seems to be a community of traders, and whether it's in the finance side or it's in insurance or it's in shipping, but that sort of trading mentality is really strong, and I think it's great because people are really trying to seek out and kind of isolate the value. And which does breed efficiencies, and Hong Kong is extremely efficient. Um, from my experience, the market though has changed dramatically. Whereas I also got involved in 2021, and you could really feel that it was very retail driven. Institutions were cautious, and the only sort of bigger players who were serious, had serious skin in the game were big crypto groups, which is totally different from now, where you have a lot of listed digital asset treasuries, you have ETFs, And so the momentum, the action has really moved to retail. And I think, that's definitely been intentional. After the FTX crash and the JPEX crash, the sentiment was, really in the toilet. And I remember that was why we launched Connected Capital as a sort of stakeholder conference to bring together, regulators, investors, industry leaders. And that was right around the time that Hong Kong was announcing their virtual asset regime, regulatory regime. And so that was our kind of attempt to raise the sentiment, bring everyone together, and find a kind of vision forward.
Yeah, because when I was going through the journey of you, I noticed you also happen to start a VC in crypto, if I got that information correctly. So I wonder, what is the metric you look at when you're trying to evaluate whether this project is good or not? Because like since we both have been in crypto since 2021, like we have seen the dynamics and the whole narratives flip quite drastically. Like each cycle they have different narratives. So I would say like 2021 what matter maybe is team tokenomics, but and then right now in 2026, is there metrics that you look at when you're trying to evaluate whether to get into Web3 project?
Yeah, sure. There's several. I mean, I guess I usually start with product market fit, or if there is a real use case that needs to be addressed. Um, Many times I find that people may fall so in love with the technology that they're kind of they have to almost create problems to that their solution can solve. I guess what I'm trying to say is that the project should address a real demand, and it should address an acute demand, not something that may happen in the future based on many things potentially happening. So the product market fit, um, the I'd say the sort of unit cost of the business, and then how solid is the team? How together is the team? I'm not saying that, I don't like decentralized organizations or anything like that, but we all saw from the last cycle, what was the old saying? It was like a dream and a team was worth $10 million, a roadmap and a plan was worth 15 mil. And so those kind of, valuations, while they were being thrown around very casually, in the last cycle, I find that, investors now have much more strict criteria. They have a much longer investment cycle, and so the whole market seems to have be maturing pretty rapidly.
Yeah, because one thing about VC, specifically crypto VC, is that the public fee really, really far, and it's not something the public will understand very deeply. So I wonder, and since you are the founder of a Web3 crypto VC, so I wonder what projects would do. Like, do they present you the just like general blueprint, what they're trying to sell, or there's like some actual broad product before going to you and pitching you the idea?
Yeah, that's a great question. I mean, I like to think that I've learned a lot since the previous cycle. So technically, we did syndicate some investments. We weren't, a proper VC in that sense, but we did invest some of our own capital. And I think that in the beginning, I myself was very sort of excited to be involved, and so did some sort of copy investing, which maybe because things were moving so fast at the time, maybe that was just the way it was going. But I think I've definitely learned more about the importance of doing my own due diligence, also of not being afraid to ask founders tough questions, not worrying about whether these things sound pleasant or might ruffle some feathers, but to really get down to the important stuff as quickly as possible. And I think that generates a lot of mutual respect on all sides. So as I'm sort of embarking on a new cycle now, I find myself forging closer relationships with the founders that I really like or that I really believe in. At the same time, digging deeper into the projects, making sure that I understand things thoroughly rather than just taking other people's word for it. And also, being willing to roll up my sleeves in the BD and help them get up to speed.
And one thing is interesting is that China still bans crypto trading. So do you take this into account when it comes to investing into an early Web3 project, or you just focus whether the team has potential or not?
So, I mean, for the China market, there are so many interesting opportunities that are non-crypto. And so there's so much sort of new tech. There are so many opportunities that have nothing to do with digital assets. And so because there's a ban on digital asset trading, which I understand, which is really a block against capital flight. The last thing that I think most people want to do is get on the wrong side of that. So I'm very people often ask me if I want to do conferences in China, and I'm very happy to do conferences about new tech. And it can be anything, can be robotics, can be AI, can be blockchain. But I wouldn't be there shilling any digital assets. That's for sure.
And right now, since the narratives are switching so quickly, like when we started out in crypto, it was about NFT on GameFi back in 2021, and then it entered the bear market. So right now, what is your stance of where possibly the market is heading to? Or is there a new narratives for degens to chase? Is it AI or RWA or DeFi or something else?
Yeah. So I mean, I think the macro situation has shifted considerably. I mean, when we were getting involved in 21, I think the interest rates were like 0 or 0.5. So basically, money was free, or money was so cheap that anything that could earn you like 1%, was worthwhile. That seems to be totally gone, and so capital preservation. People seem to be, I won't say that a lot of the investing at that time was frivolous, but I will say that, cash was cheap and it was hot and it was just, moving everywhere very easily. Whereas now, the sentiment seems to have changed significantly and people are being more cautious and more aware. So, I mean, if you're a degen, I don't know if that means you only want, digital assets or you want anything that, can really pump your bags. So prediction markets, right, are definitely, I think, an exciting degen place. And then, I don't know, the precious metals have been booming. So maybe you want to get big gold chains or, platinum medallions, or that's pretty degen as well, I think. AI companions. So I find that although people don't give Hong Kong a lot of credit for builders, for being builders, and maybe that has to do with the fact that it's an expensive place to live and there's a lot of pressure, so people may not feel that they have the bandwidth. But I find that especially amongst Hong Kong trader community, there's a lot of people who get into mining or staking or designing new trading protocols. So I find that everyone kind of comes to the scene with their own interests. Some people, it might be climate, and they're into climate bonds and green tech. Other people, it could be art, and even though the digital art world has been pretty quiet, they're determined to get back into it. So I find that of course, when the markets are good, people are happier. When the markets are down, people aren't as happy. They don't come out as much. But when I connect with people, I find that one, genuine human connection, not just being behind a screen all the time, but actually having real people to interact with. And then there's that wonderful unknown where you don't know what will come out of the conversation. And so by talking to people with sort of common interests or, certain touch points, you end up getting a lot more than you had before the conversation.
Yeah, I completely agree with you. And one thing that people don't give Hong Kong enough credit is the builders mentality, because there are amazing builders I met during crypto event, during communities drinks like this. So, since what you mentioned around the traders mentality, because like what they're building is essentially, it sounds like they are building some trading tools for people to actually use. So it's very practical. But one thing crypto community, especially in the West, what they are looking for is maybe there are actual projects that could generate 100x returns for the tokens. So the West has been talking about alt season basically ever since the 2022 bear market, and yet this cycle it has quite disappointed us quite a lot and humble us and sent us back from altcoins to Bitcoin. So what's your stance on that? Like, do you think there will still be an alt season or just mainly Bitcoin dominant market?
Yeah, so I mean, I hope I don't get in trouble by saying this or get banned from coming back on the show. I know it is traditionally a Bitcoin channel, but I do favor the altcoins. I think we will see a bit of an alt coin run this year. There's there's tokens that I'm watching closely, and then there is I guess in the previous year, Hyperliquid really snatched a lot of headlines and really. I think has set a lot of DeFi builders on this journey to kind of, be the next Hyperliquid or to make the next kind of impact like that. I don't necessarily say that I know what the next Hyperliquid will be, but I do think that it's going to be a good season for altcoins, and I'm curious to see how DeFi does. I think we're getting a return of a DeFi narrative, and I'm very curious to see how that shapes up and how it connects with the with the financial institutions, with banking, and with all of these other sort of embedded interested players.
Yeah, because like everyone is trying to look for the next hyperliquid. But like, I wonder, like, speaking as a VC, is there any early signals, early signs that we could at least confirm this is a real altcoin rally that we have been longing for years?
Yeah, that's a great question. So, I mean, I'm not a technical trader. I do follow some technical analysis, and I do like to look at the charts, although I don't claim to really understand them. But I would look for a significant breakout in any of the top 20 tokens. It seems like, you know, since the election of Donald Trump, right, there's been a sort of renewal of interest or a sort of renewed excitement in some of the altcoins. And so on the one hand, I feel like we see some coins that are maybe favored, whether by, the administration or by the leadership, and they seem almost like, chosen to become the sort of future infrastructural chains and tokens. So that's one thing that I do look at. And then I also look for, as I mentioned before, important use cases and founders that I admire.
Yeah, you mentioned Donald Trump. So, of course, that will bring opportunities to the whole crypto scene. But also, like some people will see Donald Trump as a threat, especially to China, because we all know what happened a few days ago when US took Venezuela under control. So, I wonder if there is any impact in China specifically, because at the end of the day, Venezuela is not so much about US versus Venezuela. It's more about US versus China because China invested billions of dollars into Venezuela. And that's one of the reasons why China's managed to get those cheap oil. So I wonder what's your take on the whole general stance and now that we have new information and about geopolitics.
Yeah, so thanks for that. I agree with you that the crux of the issue is the sort of U.S.-China relationship with Venezuela, really falling in the middle of that. I would push back a bit though and say that as far as, as far as US and Venezuela goes, I know right now the tone is very triumphal. And, we're talking about how, we're going to take over the oil industry and we're going to, do this and do that. And, maybe it will go really well for the US. Maybe, it will go well for Venezuela. Maybe the US will be able to, you know, assuming all of those natural resources, will be able to recapitalize the balance sheet, pay down the debt. All those things could happen, but I would say that we're probably in like the first inning of a 9-inning baseball game, and that it's way too early to see to tell what will happen in Venezuela and in Latin America. So, generally speaking, I find the trend concerning. I know that the new as I am an American, and as an American, our new national security strategy talks about how it's no longer about morality, it's no longer about legality, right? It's about ability, or about the potential, which is saying it's really about power. And so this kind of brings us back to the law of the jungle, which is a much more dangerous environment. And so it's very interesting right now because, markets are rallying to some extent. People almost seem relieved that the Venezuela operation went smoothly. And, obviously, Chevron pumped and Exxon pumped. And, maybe that is a trend that, is going to carry on through 2026. At the same time, I'm concerned by the fact that this kind of, this sort of very aggressive militaristic posture could blow back in a number of ways and could end up being disastrous for the U.S., as many people are also predicting.
Do you think after what Donald Trump did a few days ago to Venezuela, kind of gonna ramp up his hype to maybe even attack Iran? Do you think is on the table, this possibility?
Yeah, unfortunately, I do. I think the risk is definitely heightened. And uh, unfortunately, it seems like, and this is a phrase that's sometimes used in a funny way, but, it's like the gloves have come off. And so we seem to be in a very offensive posture, which suggests a kind of quickening, a ramping up of tensions. And I think, it definitely brings significant risk to investors in 2026. It also brings significant opportunity. As everyone knows, in crisis situations, certain assets or commodities can really skyrocket. So watching this very carefully, and I would assume that world leaders globally are also watching the situation very carefully to see how things end up playing out in Venezuela, and then how U.S. moves forward as far as foreign policy goes.
So during volatile time like this, would you still recommend crypto as an asset for investment? Or you more looking towards maybe traditional assets, maybe even S&P 500, or maybe gold, like precious metal?
Sure. I mean, I definitely believe that it's a great time for precious metals. They've had a banner year in 2025. And although people talk about, rotation out of that into ExxonMobil, rotation out of gold into something else, I believe it's a trend that will continue. That said, I believe that there are certain cryptocurrencies that will perform wonderfully in 2026 and may outperform gold. I don't believe that, as an asset class, all cryptos are definitely not created equal. And I think there's, Bitcoin's obviously had the most incredible run since 2008. Is it able to grow as asymmetrically as before? I'm not sure. Are there other, lower valued altcoins that have opportunity for larger growth multiples? That's kind of where I'm looking and where I'm putting my money.
Yes, that makes a lot of sense. But unfortunately, we are moving towards the end of the interview. And let's actually go back to what you're building, like the events and the community you're building. So, anything we could look forward to for crypto drinks or DAFO events, like we should look forward to?
Yeah, thanks a lot. Last month, we launched Digital Assets and Family Offices, DAFO. And it's really, about connecting uh, Hong Kong family offices with the sort of the best opportunities in digital assets. Like many of us, a lot of the family offices were in JPEGs or were in other things before, so they've had bad experiences. They know that they need the sort of best opportunities, and so that's one thing I'm excited about trying to provide. Also, there are many family offices that are, sitting on cryptocurrency and looking to, get more yield from it, whether through lending or through staking. So I'm very excited about sort of continuing the dialogue with the family offices. There's a lot of sort of young, new firepower in Hong Kong, and it's great to see how they're going to approach this. We're definitely planning some things for consensus. I have a lot of people around me in the payment space, so we're discussing doing a kind of payment summit and looking at opportunities to, kind of when people come into Hong Kong for these conferences, whether they're investors or projects, help them connect with the right people here.
Well, amazing. So, if our viewers want to know more about perhaps the updates or the where to join the events of crypto drinks or DAFO, or maybe just to get to know more about your takes on your own perspectives on the market, where's the best way to reach out to you?
Sure. So, welcome to follow me on Twitter. We also have several WhatsApp groups for crypto drinks, and I can share the links for those with you. So if you want to get sort of up to date information about our events, we'd love to have you join us. I'd love to see you at our next event.
Okay, thank you. I'll be sure to join in the next one, especially for crypto drinks as well. Well, thank you so much, Brendan, for
Thank you.
joining us today. So that's it for today, and we also have more shows lined up on Roxom TV. So stay with us.